from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, no slowing down for Meta. The company formerly known as Facebook denies a report that it planned to halt the development of its AR and VR businesses. We discuss. Plus, how Palantir is navigating the chip shortage and supply chain pains, and their outlook for 2022. And looking for opportunities, we're going to speak with Stacey Brown, Philpott, and Shu Nyata as they look to diversify SoftBank's Opportunity and Latin America funds, despite the ongoing pandemic. All of that in a moment, but first, tech stocks getting hammered and fears about Omicron mounting. Our Ed Ludlow here with more on what happened at the close. Ed, take it away.
Yeah, that rout we've seen in technology shares really deepening on Wednesday, and all about the Fed minutes, painting a picture of earlier and faster rate rises throughout 2022. The Nasdaq 100, a very tech-heavy index, falling by the most since March 2020, down 3%. Also the NYSE FANG Plus index, that basket of mega-cap tech stocks, seeing heavy losses. We also saw significant losses in US-listed Chinese companies. China ADRs on the Golden Dragon Index down 2.6%. Of course, Tencent overnight cutting its stake in an online gambling and gaming company. There's concern that we'll see other Chinese companies do that as well. But of course, this is all about Fed minutes. This is all about the outlook for rates in 2022. Come with me into my Bloomberg terminal and look at this chart, because at the beginning of 2022, we have seen yields on the US 10-year creep higher. That blue line, right far hand side of the screen. The white line, the Nasdaq 100, a deep rout in technology shares. And basically, the psychology is that higher rates reduce the present value of future earnings, specifically for tech companies, right, that have high valuations and they're fast growing. The question is this just a dip, this selling in technology shares? If you think about perhaps October of March last year, where the 10-year yield was rising, we saw tech shares sell off, but then they bounced back. Will we see a repeat of that this time? The other big story, of course, on Wednesday was the EV space. So much news coming out throughout the day. I've actually picked out this particular ETF, the Global X Autonomous and Electric ETF, which saw the biggest drop in a month. It includes a number of names, including Tesla. But there was a specific drama. I love drama, Emily, you know that, between Rivian, Stellantis, and Amazon. Of course, Amazon ordered 100,000 vans from Rivian in 2019. They came out at CES on Wednesday and said they'd ordered EV vans from Stellantis, the parent company, of course, of Ram and Jeep. You can see what that meant for Rivian, a drop of 11%, of course, because there's competition for their product. What's interesting, you remember me covering this story last year. In October of 2021, Rivian disclosed that Amazon was free to buy trucks from others anyway, but the really severe reaction in that share price, and GM, of course, I know we'll talk about this later in the show, shares down 4.5%, despite them unveiling their electric version of the Chevy Silverado pickup. Not such good news, perhaps.
Right. We're actually going to hear from GM CEO Mary Barra later in the show. Ed, thanks for that. Well, the Omicron variant now accounts for 95% of new sequenced cases in the United States. Hospitals are facing their worst staffing shortages in a year, though seeing less severe illness and death on average. But Omicron is so prevalent that more nurses and doctors are getting sick themselves, putting even more pressure on the system. Bloomberg's Alex Ruoff joins us now. Alex, the CDC recently tried to clarify guidance on how long you're supposed to isolate if you do get COVID. What's the latest?
Well, yeah, the agency, about a week or so ago, told everyone, instead of 10 days to isolate after you maybe you get sick, they switched it down to about 5 days for a lot of people. And then they sort of suggested you wear a mask. I mean, they issued some guidance sort of shrinking how long a lot of people should isolate if they get sick. And they came to clarify, and a lot of people expected them to say things more related to, maybe you should test out, or, what they sort of just clarified more of the specifics about wearing a mask after isolation. And it wasn't as strong as a lot of public health officials have been urging. But, the White House, a lot of the top public health officials have said, we can't sort of shut everything down for at this point. And they were really emphasizing this idea that for a lot of cases, particularly people who aren't showing symptoms, they can get back to work maybe sooner than they have previously. And that has really shaken up a lot of particularly public health people who feel like these isolation periods were important to help sort of stem the transfer of the virus.
The UK, meantime, just announced it's relaxing its COVID-related travel restrictions. Do you expect other countries to follow suit, especially as cases continue to spike?
I don't really. The UK, Boris Johnson in particular, has been very sort of hands off on this. They have not. They've been sort of pushing a little bit back. It sort of came a bit as a surprise, but again, this is the prevailing theory. US, the UK have been saying, look, even though we're seeing more cases, we're not going to lock things down. We're going to sort of keep pushing people and trying to get our economies moving along, and that has been this sort of trade-off that a lot of Western countries are taking at this point is, we want to keep people working despite these raging cases. And we're going to see how that plays out in the weeks to come.
Well, it's playing out so far with increased cases. We shall see. Alex Ruoff of Bloomberg Government, thank you for that update. Meantime, Facebook parent Meta says it has no plans to halt the development of a new operating system to run its VR and AR-powered devices, denying a report in The Information which claims Meta shelved the project, opting to modify an Android version instead. Bloomberg's Naomi Nix, who covers Meta, joins us now with more. So, Naomi, are they or aren't they, and why does it matter?
Yeah, I think that's a bit unclear, but Facebook, or rather Meta, says it's still looking to invest in creating new operating systems. It says it doesn't have any plans to halt that work, although it didn't give really any details about what that work's looking like or whether, how its technical approach to building that out has changed. But it just shows that this is a really hard but important work for Meta. Meta has had to rely on mobile makers like Google, like Apple, to get its services in the hands of consumers. And, Mark Zuckerberg doesn't want to have to do that anymore. And so that's why, the company has been making such a big push into the metaverse, into building out its own systems that are powered by virtual and augmented reality and others with mixed reality, so that it avoids that dependence on mobile device makers.
Well, we've certainly seen the evolution of this conversation about the metaverse explode since Facebook announced its plans back in October, but there's also competition. There are other device makers getting into the game. What does the competition look like in 2022?
Yeah, I think this is really going to be an interesting year comparing Meta to Apple. So Apple is expected to be releasing its own sort of high-end mixed reality headset next year that would directly compete with a headset offered by Meta. Meta is also working on, working on a smart watch device. It's also working on augmented reality-powered glasses. But then we also have Snapchat in the mix here. Snapchat years ago debuted smart glasses, and it's also working on augmented reality glasses, and it's a few years ahead of Facebook in this endeavor. And so what we're really seeing, and then, Microsoft's in the mix here, in terms of sort of other metaverse, as a player in the metaverse. And so what we're seeing here is this is really the next frontier of competition when it comes to hardware tech-related offerings.
All right, Naomi Nix, who covers Meta for us, obviously a trend we're going to continue to follow throughout the year. Coming up, Palantir and Hyundai Heavy, the world's largest builder of ships, joining forces. We're going to be joined by Palantir's COO to talk more about the $25 million deal announced at CES and get a status update a year after going public. This is Bloomberg. Some breaking news now. The CDC advisors are now recommending a Pfizer booster shot for kids aged 12 to 17. Big news. The thought is that a booster expanding to teens could help keep schools open. Obviously a hot topic, especially given what happened in Chicago today amidst the COVID surge. We're going to continue to follow this. But again, the CDC advisors. A panel had been meeting today. They're now recommending a Pfizer booster for kids 12 to 17 years old. Meantime, CES 2022 now in full swing, and a slew of tech companies are making big announcements. One of them is Palantir, announcing a new big data deal with the shipbuilder Hyundai Heavy Industries, a multi-year deal valued at more than $25 million. Palantir COO Shyam Sankar joining me now for more. So Shyam, how will this partnership work?
Thank you for having me, Emily. Yeah, this partnership is very exciting. It represents our first major expansion into Korea here. We're working with Hyundai Heavy here to drive the digital transformation of their entire business. This is the largest shipbuilder in the world. Just true feats of engineering, the scales of these ships that they're producing, a new ship every 8 months, and everything from how do I produce these ships better, faster, cheaper? How do I manage them in the aftermarket once we've sold them? And I think perhaps most excitingly, how do we introduce autonomy into ship transportation today? 80% of all accidents are actually human error. And this is a big opportunity for the world, for commerce, for economies.
What does this mean for Palantir's business, and how will it help you expand internationally?
Well, it really builds on our track record of working with industrial companies. You know, I would say Skywise, the aviation ecosystem that we built with Airbus, was quite revolutionary. It brought together the 15 largest suppliers in aviation with 150 airlines. It generates billions of dollars of value for the aviation ecosystem. We brought that to automotive, and we're super excited to bring that to the shipping industry, both on the manufacturing of ships, but also the transportation, the execution, the operation of these vessels as well, and all the participants in that ecosystem.
Well, and speaking of manufacturing, how are supply chain pains impacting Palantir and impacting your clients, given the number of industries that you touch, including now building ships?
As you know, Emily, we work across 40 different industries, and we've had a big role in helping companies with supply chains from the very beginning of the pandemic, like helping 3M produce PPE, helping keep hospitals open and running. One of the interesting realities now with Omicron is that you're seeing that it's not just about part availability, it's about people availability. You see that hospitals are struggling to have full levels of staffing. And that is actually, in a holistic sense, a supply chain problem. So we are helping people manage parts and people together. And I think a big part of that is companies are realizing that these kind of cute sayings of just in time or just in case, these are just cute sayings. The reality is that managing your supply chain is a software problem. And we are bringing that software to the front lines to help them do that.
You actually have a partnership with Merck to try to address some of these issues, the chip shortage in particular. What are you learning from that?
Yeah, Merck is one of the largest suppliers of material to the semiconductor industry. And clearly the crisis in semiconductors now, we've worked with industrial companies as they kind of work around this. But Merck and Palantir are joining forces to address the problem head on, really thinking about how we optimize quality and yield and get the most out of the chips that we are producing, the silicon we are making, and get them to the most effective places. And part of being at CES for us here is to meet with the semiconductor manufacturers and start seeing how we can help them drive quality and results immediately.
You're at CES actually this year. Unlike many companies and executives that decided to present virtually, I know that EVs are a big theme there. You've also got a partnership with Wejo, which is a connected car platform. Where are you expecting to see the most innovations on the EV front? What are you looking ahead to?
I really think about it as mobility, broadly speaking, everything from autonomous vehicles, electric vehicles, the connected vehicle data. You're seeing a big convergence there. And one of the huge themes it has for us has been leveraging the edge AI capabilities that we've been developing over the last few years. All of these connected devices are generating so much data. People are realizing that that's actually a problem. It's too much data to bring back from the vehicles themselves to the cloud. So how do you push the analytics to the edge? How do you start using those analytics in simulation? You know, we think about the metaverse from a consumer's perspective most of the time, but really one of the more exciting applications are these digital twins, or as Wejo calls it, the meta twin that allows cities to look at and simulate what would happen if they changed how their traffic lights work based on this connected vehicle data that's streaming off, or allows EV manufacturers or AV autonomous vehicle companies to actually do more simulation to understand how they can get more safety under more environments and bring those to market more quickly. And we think there's going to be huge opportunity in that space. They launched their Neural Edge product at CES, and Foundry's a big part of that.
There's been some debate, Shyam, about whether CES should have moved forward in person at all, given the spike in COVID cases, and some skepticism in general about how relevant CES still is. What's your perspective on that, given you're there at the conference this year? How much value do you think it really still has?
We've seen great opportunities from being here. Of course, people are being very safe and taking precautions, and that's changed the ways in which people are engaging. But I still see a lot of cutting edge innovation, great opportunities to engage with partners and build the future together.
Now, we're speaking about a year now since Palantir went public. Just looking at the stock, dropped by about 21% over the year, underperformed the S&P. Do you see that turning around in 2022? What's your outlook ahead?
We guided in Q4 to 40% growth in 21. Pretty excited about that. Pretty excited about the fundamentals of the business. Over $400 million of cash flow is our guide. So I think that the business is performing really well. And what we focus on is working our tail off to create value every single day. We're doing this for the long term. You think about a great company like Apple, they've been around 45 years. It took them 30 years to create the first $100 billion of value, 12 additional years to create the next trillion, and 3 years on top of that to create the subsequent 2 trillion. And so we plan to do this for a long time. We have a monastic focus on creating software that the world needs before the world knows it needs it. We plan to keep doing that, and we think that will be reflected in the long term.
All right, Palantir COO, Shyam Sankar, good to have you back with us. Thanks for stopping by. Meantime, I want to stick with supply chain issues and the chip shortage. My colleagues Alex Steele and Guy Johnson caught up with Vladimir Rozanovich, Lenovo's president of North America, as part of CES. They asked about how that company is navigating new product launches with the supply chain crunch.
What we're seeing is things like, shipping by freight is about 5x higher this year than it was last year, 2x higher on air freight costs. So we're starting to do things like making sure the boxes are smaller, lighter weight, making sure that we're, to some of our large customers, we're actually shipping in multi-pack boxes to reduce that footprint and that weight, and especially the space that it takes to ship some of these devices in. So that is absolutely something that we're looking at. Now, it's true. One of the things that you do is, in order to make sure you're innovating, we spent over $2 billion in R&D to make sure that we are innovating products that customers want. And one of the things we're hearing from customers is they want a more sustainable product for their corporations, for their enterprises, and even for their home use and small business use.
Well, let's talk about home use. What are you seeing in terms of the trends in terms of usage right now, particularly for those corporate products? A lot of people watching this are going to be sitting at home. They're still going to be working from home as a result of Omicron. They're still going to be using virtual meetings. They're still going to be using Zoom. They're still going to be using Teams. How does this new product fit into that landscape? And how does it evolve with that landscape? There's a lot of conversations around what is going to be happening with Meta, particularly in the corporate landscape. How is this new product going to fit into that landscape?
Yeah, guys. So there's a couple of things we've done. Number one is with this particular Z series notebook, we worked with AMD as a partner to make sure we're developing a product through their CPU that delivers the highest and most realistic audio qualities, for Teams usage, for Zoom usage, and really to create an environment where you're hybridly there. We've seen the dynamics change over the last 18 months, 2 years. Work remote is now turning into hybrid work. It's an area of the market where, the more you could actually create a better virtual experience for employees or consumers, that's really some of the trends that are driving the industry today.
Vlad, what is it like to get your hands on chips and stuff? Like, how are you dealing with the shortages that everyone's kind of having to deal with right now? I know you mentioned sort of making packaging lighter so you have a lower footprint and that helps. What about chips?
Yeah, Alex, obviously, we've seen supply chain issues now for well over a year. But being the #1 PC manufacturer in the world, it actually gives us a lot of clout. we made massive investments when it came to buying products early, whether it was chips, memory, drives, panels. Those were all things that we made early investments on. And it's one of the things that I think has kept Lenovo up front as the #1 PC manufacturer. The other thing we've done is we've leveraged all of our worldwide manufacturing locations. So operating in over 180 global markets and manufacturing it in about 10 different countries has allowed us to actually spread out some of those areas where we could actually procure and build product closer to the customer. That actually reduces some of that shipping time that you were talking about.
Lenovo President of North America, Vladimir Rozanovich there. Coming up, Sony making its way to the EV market. We're going to talk about how the electronics giant may be leaping ahead of Apple and more. This is Bloomberg. Sony is launching its own car company to explore the EV market. Best known for devices like the PlayStation console, the electronics giant announced at CES that it's setting up its own mobility unit. Sony's president and CEO said they're looking forward to bringing together, quote, creativity and technology to change the experience of moving from one place to another. And more on China's tech crackdown. Tencent is cutting its stake in Singapore's Sea Limited, selling $3 billion worth of shares. This sparking concerns that other firms will pare down their own tech investments as Beijing continues its crackdown on China's tech giants. And Bitcoin slumped by as much as 5.6%, sending it to the lowest level since its early December flash crash. This as growing expectations of rising borrowing rates are weighing on some of the best performing assets of the last few years. Coming up, we're going to talk to the leading investors for SoftBank's Opportunity and Latin America funds. Stacey Brown-Philpott and Shu Nayata joining us to talk about what their top priorities are in the new year. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. We are less than a week into the new year, and despite the still raging pandemic, hope remains that this will be the year it ends. With that, investors are still looking for those untapped markets, some focusing on those hit hardest by this pandemic, women and communities of color. Joining me now is Stacey Brown-Philpott. She is one of the founding members of SoftBank's Opportunity Fund, which focuses on Black, Latinx, and Native American founders, and Shu Nayata, managing partner at SoftBank and co-leader of SoftBank's Latin America Fund. Shu and Stacey, thank you so much for joining us. Stacey, I want to start with you. You're focusing on founders that have been overlooked for far too long. What are the priorities for this year?
Well, thank you, Emily, for having us. We are so excited about the opportunity that we have coming into this year. The Opportunity Fund has already invested $75 million in over 70 companies. We've looked at over 2,000 companies, so there's no pipeline problem. What we know is that it's not even an easy pass. It's really hard to pick some of the best companies that are out there. So we're looking for great companies, just like the rest of SoftBank, which are companies that have a great founder who's passionate about what they do, that have an idea that can scale and have the potential, the grit, and the perseverance to make it happen. We're excited to invest in many companies across all sectors, which is representative of our portfolio today.
Shu, your focus is Latin America, and you've made investments across a slew of sectors. Where are the biggest areas of excitement for you, especially as the pandemic drags on?
Yeah, I'd say to contextualize both the Opportunity Fund and the Latin America Fund, SoftBank is known primarily for this mothership fund called the Vision Fund. But there's a whole other group of SoftBank called SoftBank Group International that looks for pockets that are underexplored. And so Latin America, the Opportunity Fund, Miami are all part of a general idea that there are these pockets of activity where great founders exist and no capital exists, or not enough capital exists. So there's a definite connection between all those initiatives. Latin America, we came into in early 2019. There was hardly any growth capital there. The capital in the region was to the tune of $1 to $2 billion a year. That last year is probably going to be about 15 billion invested in Latin America in the year, and a flood of capital from foreign investors who really haven't been there before. The opportunities are much broader in Latin America than we presumed at first. Coming in, we thought it would be the usual e-commerce, fintech type of opportunities. It's been incredibly broad and deep across types of markets and industries. There's software companies in Brazil that are giving the American ones a run for their money. VTEX went public on the NASDAQ or the New York Stock Exchange, I believe, actually, and is a Brazilian e-commerce enablement company, a software company. So you're seeing a lot more real high quality, globally competitive entrepreneurship coming from these markets, which are often much more difficult to do business in. So the founders who build there are really battle tested for the world.
Now, I spoke with Marcelo Claure, SoftBank's COO, and the CEO of SoftBank International almost exactly a year ago today about what the priorities were then. Take a listen to what he had to say.
We're going to continue to invest in companies that utilize data and artificial intelligence to disrupt traditional business models. We like companies that are making the way we work, the way we live, the way we play, making the world a better place.
And I believe he did that interview, in fact, from Miami. Stacey, I'm curious, that was at a time we didn't think the pandemic was going to go on this long. And I'm curious how the strategy or philosophy has changed, given that we're still in this.
Yeah, it hasn't changed. What Marcelo said is the same as it was a year ago. We just talked about how we just entered a new year, though it feels a lot like the same. We are still interested in investing in companies that are using data that are going to change the world. We have made a number of investments, one recent one in Welcome Tech, which is an amazing company that is focused on helping immigrant populations better connect with financial services. We're also investors in Praxis Labs, which is helping to use mixed reality to achieve areas around diversity and inclusion. These are all topics that were true a year ago, and they're absolutely true today. So we continue to look for great founders who are Black, Latinx, and Native American. The one thing I will mention is that we've not yet invested in a Native American founder. So one thing that has changed is that we spent the last year meeting with over 30 different people from the Native community to really understand how do we really invest in that community and find entrepreneurs who are building great companies. And so what we learned from that is that we've got to take a different approach to investing in the Native American community. And so we'll be looking at some partnerships this year. We may be reinventing a little bit around our investment model and maybe even considering some pre-seed investments, which is not something that we've done in the past. So we're excited to bring some founders in from that community into our portfolio in 2022.
Now, there's never been any shortage of headlines about SoftBank, especially since Masa announced he really wanted to double down on investing in technology. There has been turnover in the partnership, and also there have even been reports about Marcelo potentially leaving. Shu, what are you saying to founders about whether or not they're going to have the stability and the resources they need to be successful, and whether the relationships they're developing with folks at the fund will last?
Well, obviously, it's not wise for me to comment on private negotiations happening between my bosses, so I'm not going to do that. But as far as Latin America goes, we've built a team that is dedicated to the region and is very unique. So we have people living in Brazil, in Mexico, in Miami, all focused on Latin America. We have both an investing team and an operating team. The operating team is focused on helping the companies, once we invest in them, to be better, to achieve specific goals, a real operating muscle that we add to the capital muscle. None of that's going to change. And SoftBank's capital position is strong. SoftBank continues to invest around the world. And Latin America is representing a larger and larger component of that, not just for us, but for all capital allocators. We've seen every brand name investor in tech come into Latin America in 2020 and 2021. That's going to continue. So the region is as exciting as ever on its own merit. What we did in 2019 was jumpstart our own efforts there, but I think those efforts can stand alone now for the foreseeable future.
Now, Stacey, talking about the Opportunity Fund specifically, how will you measure success?
We measure success just like many other venture funds. We are in this to invest and generate venture-like returns just like every other venture fund out there. So success for us is, do we generate returns? Success for us is also the value that we create in the communities that our founders come from. We have a value creation team that is dedicated to working directly with all of the founders in our portfolio to not just give them capital and validate their business model, but to really create a community so that they can support each other. Ultimately, we want to change the face of wealth creation in our society. I can tell you now that more than half of our companies that we've invested in have raised follow-on rounds, many of which that we've participated in. So another measure of success is how successful our founders are in scaling and growing their business and the validation that they receive from the broader investment community in their ideas. And we're very happy to see that continue.
Now, we can't escape NFTs or the cryptoverse this year. And I'm curious, Shu, does SoftBank see crypto as an opportunity? How big an opportunity? And especially with countries like El Salvador making Bitcoin legal tender?
Yeah, so we're strong believers in the Web3 revolution. This isn't about Bitcoin only at all. It's about a fundamental restructuring of some of the substrate that technology companies are built on. And that is as true, if not more true, in places like Latin America than in more developed markets, because there are many gaps to fill with this new technology. You gave the El Salvador example, but Mexico, Brazil, Argentina, Venezuela, Colombia, all have innovation around Web3. So we're fully committed to it. In fact, we had a 2-week period where for every single day of that 2-week period, the entire Latin America fund had to spend 2 hours studying crypto. And that was either with an external speaker coming in or reading specific materials or watching specific content. And we're going to share that broadly now with our portfolio companies. We think this wave is real as mobile or cloud were, and will persist. So we're all in on Web3 and crypto.
All right. Shu Niata, Stacey Brown-Philpott of SoftBank, thank you both. We'll be watching where you place your bets. Thank you. Coming up, 2021 was all about the rise of NFTs and the sector. Will it continue to soar in 2022? We're going to talk about that and more with Activate CEO Michael Wolff coming up next. This is Bloomberg. Tough start to the year for tech stocks, continuing to plunge for a second day with concerns about faster rate hikes looming over potential growth and profitability. Is 2022 the year we see the tech bubble pop? Our next guest joins us with his tech predictions, Michael Wolff of Activate. Michael, great to have you back with us. So is it, does the tech bubble pop? Does the tech bubble pop this year?
No, it doesn't. Growth across most of the major companies continues. Tech continues to be the second largest part of the world economy. And even if you look at the last bubble, what you saw was there was some demolition in value, but what you didn't see was the growth stop. And we're going to continue to see growth in each of these companies.
So where do you see the winners and losers? Who are they?
I mean, I think when you look at, it's all over the place. I mean, one of the biggest winners, and we talked later on about the Metaverse, but is Roblox. They had 100% growth in revenues, 35% increase in stock value last year. Zoom, which everybody thought was sort of flash in the pan, was up between 2021, was up around 350%, but it's still up, and based on estimates in the third fiscal year, still up 50%. TikTok, now the largest site on the internet, only followed by Google. And even though I have a long way to go in terms of turning that traffic into revenues, they've come out of nowhere in the last couple of years. Shopify revenues up 40%, estimated to be up 46% year over year. They're just everywhere you look, you see a lot of growth. And even Apple, look at Apple's revenue growth. Amazon almost up over 22% between year and year, and almost 2/3 of that in Amazon's highly profitable marketplace business.
Speaking of highly profitable marketplaces, what are your thoughts on NFTs and whether that market will continue to soar? This year, there was a lot of volatility, a lot of big swings, downswings, optimism, pessimism. Where do you think this goes?
Well, certainly 2021 was the breakout year. And we went from 2020 around 100 million in sales to, we estimate, about 8 billion in sales from 2021. And while you think a lot of that being games, it's reality. A lot of it's been in sports trading cards, and NBA Top Shot. We estimated it'll be around 800 million. And even Nike got in the action. Nike bought a company in the middle of December called Artifact, which does virtual apparel and virtual sneakers. So we're not sure if, from a value perspective, this is a bubble that's going to burst or if it's going to continue to grow. But what we do believe, and that's about values, we do believe that NFTs are here to stay, and they're going to be important, especially as we move into the world of the metaverse and people are looking to take those virtual goods and put them into their presence in metaverse.
There's an interesting trend in video game makers getting into NFTs, but fans seem to hate it, which I find curious given you would think that there would be some crossover there. What do you make of that?
People have been trading virtual goods in games for a long time. If you look at games like World of Warcraft, they've been winning the digital elements. They've been trading them on marketplaces, mainly marketplaces in places like Korea. So gamers are used to seeing virtual goods and trading it for other virtual goods. I think part of the reason why gamers are not really so excited about it is because they don't view it purely as games. And these are people who are buying an element, a Bored Ape or whatever, and it's not part of a game. It's not part of an environment, and they don't view it as authentic.
What about crypto? Crypto in 2022, where does it go? Quickly.
Well, crypto, actually, the biggest winner in crypto is Ethereum. Up from a value perspective, up over 500%. Ethereum is important because it's not just cryptocurrency, it's also a blockchain platform that other people can build applications like NFTs on.
All right, Michael Wolff, CEO of Activate. Always good to have you here, Michael. We'll be watching to see if those predictions ring true. Coming up, it took just minutes for GM to sell out of its brand new EV Chevy Silverado, but can the company compete as the EV pickup market gets even more crowded? CEO Mary Barra reacts next. This is a big day for GM. The company showcasing its new all-electric Chevy Silverado at CES. The truck set to go on sale in the spring of 2023 and sold out in just 12 minutes. CEO Mary Barra spoke with Bloomberg's David Weston and Romain Bostic about the big rollout.
We're going to bring them to market as quickly as we can. We anticipate that we'll start with the work truck variant, and that will be available in spring of next year. And then in the fall, we'll have the RST, and we're going to work to get them to customers as quickly as we can. And the reception, I have to tell you, David, has been great. The first edition of the RST sold out in 12 minutes, and reservations are still coming in. So we're super excited about the response that we're getting, because this is a ground up EV truck that has so much capability. We're so excited to share it with the world.
So, Mary, congratulations on all the people ordering already. There's the demand there. At the same time, as you know so well, you're a year or so behind where Ford is with the F-150. How are you going to catch up? And maybe as important, is it important for General Motors to catch up with Ford when it comes to the full-size pickup?
Well, you know, David, when you look at the EV race, we've already had the Bolt out for several years, and now the Bolt EUV. We're shipping Hummers right as we speak. The Cadillac Lyriq will be out in just a couple months, and then early next year, we're going to have not only the Silverado, but we're going to have next year the Chevrolet Blazer EV, EUV, SUV, as well as the Equinox. So I am so excited about all the electric vehicles that we have coming, and that's why I'm so confident by mid-decade we will be the leader in EVs with the battery plants we have, with the assembly plants that we're putting in place, and with the models and the volume segments of the market. We are going for total leadership here.
Mary, with regards to the accessibility of some of these vehicles, not just the vehicles that GM makes, but a lot of your competitors, these are still relatively expensive vehicles that could sometimes cost $50,000, $60,000 or more once you get them fully loaded here. When do we get to a point where we see a little bit more price accessibility so that we see a little bit broader adoption of EVs?
Well, I think that's why it's so important that we've got the Chevrolet Equinox EV coming out, because it is so important to get, to your point, into that affordable part of the market. The $30,000 to $40,000 is a huge volume segment, and that's exactly where we're targeting the Equinox, and it's going to be nicely equipped. When we reveal that shortly, just not too long into this year, people are going to see just how much value they're going to get for that starting price of $30,000, and I think that's when you're going to see that huge adoption, especially with the work we're doing to make sure that there's adequate charging. So I'm super excited to get those affordable EVs into the marketplace, because as you know, at General Motors, we really want to bring everybody in.
And we know that a big part of making this more affordable is, of course, improving the drivetrain, improving the batteries to the point where they are a little bit more economical to produce, and as a result, that brings down the cost of the car. How far along are you in GM's development of that technology and of that battery manufacturing, where you can have some confidence here that the price can come down meaningfully for consumers?
Well, we have that confidence. When you look at the previous generation battery technology we are using on the Bolt EV and EUV to what we're launching with Ultium, first with the Hummer, then with the Lyriq, then with the Silverado, the Equinox, and the Blazer, that's coming on our new generation of Ultium technology that is already 40% less expensive than what we have with the Bolt. And we believe by mid-decade that will be 60%.
GM CEO Mary Barra there. And the battle in the EV world heating up, and Tesla still the biggest target. Our Ed Ludlow with us again to talk about the latest Bloomberg Quick Take. Ed, walk us through the big take of the week and the two automakers really trying to take on Tesla.
Yeah, well, you saw in that tape there, the kind of splashy announcements of the last 2 years have been about Ford and General Motors and electric pickups. But we have to talk about the two biggest automakers in the world, Volkswagen and Toyota, because they sell 10 million cars a year per piece, right? That's 10 cars for every one that Tesla sells. So this is a really big year. You know, these two companies put their money where their mouth is, and now we need to learn what they're going to do to take on Tesla, because they are the biggest in the world.
What's Volkswagen's strategy? What's Toyota's strategy?
Yeah, so for Volkswagen, you know, they've channeled their inner Tesla. Herbert Diess, the CEO, has channeled his inner Elon Musk. He's going full send, basically, on electrification. $100 billion commitment over 5 years, both on software and development of EVs. And they want to electrify the whole fleet and do it quickly. And why everyone's excited is this huge manufacturing footprint. They may not yet have the technology proven, but what they do have is a legacy and a history of manufacturing and delivering vehicles at scale.
How much does Elon Musk care about all this? How much is he paying attention?
Yeah, you know, he has this line that you and I have discussed time and time again. Prototypes are easy, production is really, really hard. You think about Volkswagen, in the first 10 months of 2021, that's what we have the data for, they sold just a little more than 300,000 EVs, right? So they have such a long way to go to catch up and manufacture these EVs at scale. And they feel, Tesla, they have a technological lead, right? Where they can give, you heard it in that package, Mary Barra, the best value for money, bring the cost of battery packs down and pass that on to the consumer. And Tesla are bullish, right? And so are their investors, because Tesla continues to invest in the manufacturing process and try and build on that advantage, not let it slip to some of the legacy players like a Volkswagen or a Toyota, for example, who are still very much focused on hybrids and even hydrogen without going fully into battery electric vehicles.
So when you look at the market ahead, which car maker is really the closest to challenging Tesla in terms of market share, in terms of quality?
equity market investors have given such a lot of credibility to Ford and GM because of the pace of what they've done. But they don't respectfully have the scale of Volkswagen. And I think a lot of people, if you read the research notes, they're waiting for Volkswagen to go big. And 2022 could be the year that happens.
Okay. Ed Ludlow, thank you so much for that update. And that does it for this edition of Bloomberg Technology. Join us tomorrow. We're going to have much more from CES, including the CEO of Electromechanica, Kevin Pavlov, and the CEO of Deere, Janie Heinman. Plus, we're going to talk about the role of social media 1 year since the attack on Capitol Hill. David Kirkpatrick will be with us. I'm Emily Chang in San Francisco. This is Bloomberg.